Hi, welcome to another episode of Ying's Squawk Box. We had a quite volatile month in the past of this capital market in the United States. We had this fear of coronavirus starting from the beginning of 2020, and then on February 20th, that's going to be a pivot point. Let's use that as a reference. That's the top of the market, and boom, in the past 3 to 4 weeks has been a wild drop. It's like someone had a huge diarrhea and just go straight down and nothing can stop it. And here we talk about this resistance area failed to support and this resistance area failed to support. Now, today this episode is going to be very interesting because I actually like how this chart plays out. We have this day during the Christmas of 2018 and we had this correction here and we formed this support and it looks like the market closed above this point. So something like that is interesting. What that tells me is above 230 in the futures of S&P 500, there's some sort of buying power here. And another reason I say that is because one index I particularly like to go along with the market is RSI, Relative Strength Index. And from the chart, RSI has been breached of this oversold area right above 20 and bounced back up a little bit. Although the price kept going down, this area actually tells me that the rate of the price go down is actually slower. So something like that is definitely worth our attention. I definitely see a small bounce back from 230. It's going to be very difficult for short sellers to come in and just push the price lower from 230. So I would say definitely a bigger chance of bouncing back up than going down. Now, it's still a little bit too early to say that we're going into a bear market. Bear market, you see lower low and lower highs. Usually the stock goes down like that, but certainly there is a chance if we have a lack of supply in the workforce and the labor market in the United States due to coronavirus, due to everybody staying home, then there's certainly a chance that we make a small bounce back here and keep getting lower. If that's going to be the case, then um, then I don't really see a whole lot of area to cover until this 180 area, and that's going to be a very big drop. Even if we go there, we probably won't go there straight. We're probably gonna be having some sort of volatility coming in around 230. We're gonna go up and down around 230, and then we're probably gonna go down during the summer if it goes down. Now, me personally, I think this market is still relatively strong in a sense comparing to China, comparing to other emerging markets, comparing to Europe. Overall, I'm still optimistic. Me personally, I did avoid a whole lot of volatility here, but I got back in the market 2 days ago and a day ago. Right now, I have about 50% account value in this market, and let's take a look at some of my holdings. First thing I want to mention is QQQ Power Shares. Power Shares actually act just like market. A stop here above this 6-month low. Here the support of 170, and the next one we're gonna see is this 2018 Christmas level at 143. So as you can see, power shares act a little bit less volatile than the market in the sense that market breached here, but the power shares did not. So that's definitely a small amount of alpha that you can generate from there. Another name I like is Zoom. Now, me personally, I stay home, I work at home, I'm a data scientist, and I use Zoom almost on a daily basis. Now, I'm not saying Zoom is very good, but it does provide that layer of convenience for us and for those who work at home. I'm proud to say that I got in this name. It's been doing much better than the market, and today we've seen this breakout boom away from 213. Now, I think that could be interesting because it could potentially lead to 130 and make new highs. And even if market bounce back up, we're still going to make new highs. So something like that is definitely interesting. And then another name I want to mention is Netflix. When people stay home, people like to watch things, myself included. So Netflix, we've seen that it actually did not breach. So 6-month low is actually here around 252. It actually didn't even get close to there, and it bounced back up. Another interesting name that we all know is Amazon. Amazon is of course a strong name. I'm not surprised at all that it didn't breach the low of the last year. The lows last year is actually 1325 here, and it didn't quite breach. We held the support here around 1700. So there you go. I hope you liked today's episode. If you want to support the channel, give it a like and click that subscribe button, and I'll see you in the next episode.